There's been lots of talk this week about, I think it was maybe Tuesday, Wednesday, where markets were falling and Bitcoin was staying steady roughly. So Bitcoin was up just a little bit on the day while gold was down 2.5%. The S&P was down almost 5%. The DJI was down 4%. Nasdaq down 4.75 in comparison. So we very rarely see days like this. Here's a tweet from David Lawant. He said, BTC is actually holding up remarkably well, all things considered. Remember how it reacted during broader market panics just a couple years ago. Sign of the times. So John, what do you make of this price action?
Yeah, what a week. Definitely a historic week for markets. I was out for a family event, out of pocket all day yesterday. I feel like I missed a ton. A huge day, then another huge day today. So I'm catching up a little bit. I do want to shout out the chat. We got a lot of big galaxy brains in the chat. We got a few comments here. I'm not dumping you. We're just decoupling. I love that one. SF Hodl, well done. Someone else called out, look at GME. And I had not seen this. I had not seen GME's price today. GME, GameStop, for those unfamiliar with the ticker, is up 9% on a day when the markets are tanking for, I think you get to call a 4 to 5% one day drop in the S&P 500 is a tank by anyone's definition. So yeah, markets are tanking. Bitcoin is up. That's what Brady just showed. We have some other graphics that we want to show. We don't want to read too much into a one-day trend, or maybe we do, but no, we want to have
we
more.
Want to, but we shouldn't.
We want to, but we know we have to be a little more balanced than that. So, and this is more than a one-day trend. And we have another graphic that we want to put up because we wanted to look back to November of last year, just before the election. But you could really pick, it doesn't have to be November 1st. This chart would look roughly the same. If you picked October 1st, September, December, would look roughly the same. And we have IBIT here as the proxy for Bitcoin because that is obviously one of the Bitcoin ETFs. Everything else here is an ETF of some sort. And just going down the list in order of best performance since November 1st of last year, Bitcoin at about 22%. Gold is next at around 10%. Government is the ticker, GOVT. That's a government bond index. That's up 4%. LQD is an investment grade corporate bond index. That is up, call it 2.5%. HYG is a high yield corporate bond index. That's high yield is also referred to as junk bonds sometimes. That's basically flat. PDBC is a commodities ETF, broad basket of commodities. That's down a couple percent. And then the big ones here that many people in the country have exposure to, SPY, QQQ, and MAGs. That's S&P 500, NASDAQ, and the MAG 7. Those are down about 10%, 11%, 12%, call it, respectively. So that's been the performance since November 1st. Anyone listening to this, you probably have heard a Bitcoiner somewhere say something about how Bitcoin should be treated differently than all these other asset classes, given what it is, given the nature of it, given its properties. We've been banging that drum for how many years now? Just last week on this show, if you guys tuned in, we did a little round the horn, me, Brady, Steven, and Ben Workman, on why we think Bitcoin does trade with a high degree of correlation to traditional assets like stocks. I won't rehash all that now. I just bring that up to say it's funny timing because we were just talking about that last week. And now just a handful of days later, this, again, it's one day trend today. That's very big, but we did show you the numbers since November. There does appear to be some form of decoupling here. And we're going to get into the tariffs. Maybe as people look at the tariff announcement and say, hey, all these other asset classes are really affected by tariffs and all this uncertainty, maybe Bitcoin will look like this more certain neutral monetary asset that people are going to jump into instead of all those other more volatile, uncertain asset classes. So that's what I got for the open there, but curious any thoughts and comments you guys have.
Let's take a look at this chart too, John. This is a 3-day, the x-axis isn't, the labels are gone, but this is just about the past 3 days or 3-day price action. You can see these long, just straight lines down and to the right are there because markets don't trade during those times. So this chart also goes to show Bitcoin's 24/7 global market as opposed to these legacy fiat markets that don't trade 16 hours a day. And so you can see them going down overnight twice. On the second day here, while there was another big drop in the markets, Bitcoin stayed very stable, in fact, up just a little bit. So you can see that decoupling visually in this chart here.
100%. One other thing I'll just call out before Isaiah and Matt, if you guys want to chime in with anything, but this is something I've been monitoring for at least a few weeks now, is this notion of decoupling, but for a specific reason. And it would be, what if the tariff headlines, policies remain uncertain? There's announcements back and forth. Trump announces a tariff here. This country announces a retaliatory tariff, all that stuff. What if that keeps happening? What if the Trump administration is okay with these equity declines and they don't really come up with another policy that they are going to try to support the markets with? This concept that they're just okay with the S&P going down. Maybe it's because they want the 10-year yield to go down as well. Let's assume that's the case. But then at the same time, what if there's a big Bitcoin buyer that comes in, whether that's the US government, whether it's a GameStop, a series of GameStops, another nation state? That would be a massive decoupling, to see stocks being weighed down by all the tariff and economic uncertainty. But then you have the big buyers in there pushing the price up. I think that's entirely possible. We might be seeing a version of that happen today, but I think that's entirely possible to happen over the next few months here.
Yeah, I would also add, it's hard to say, in a short time frame, hey, the decoupling's here. What I do think is really interesting is, again, you can look at gold over the last year, and in the charts that we just showed a little bit ago, gold's sold off, but gold's been really strong. And typically gold and Bitcoin are going to move up together because those are the unprintable type of assets, the hard assets that people will move to. And gold has done fantastic and has done really well, pulled back a little bit with some of the tariff news. But even in the chart that Brady just showed with the different days, everything kind of ran up into the announcement on Wednesday and then sold off. And Bitcoin went down and moved very similar to the other assets. But then today, or we start to see the markets today, Bitcoin is like basically flat, slight up for the week, which is pretty wild then to start seeing. But I've heard countless on Twitter and now X, Bitcoin is just correlated to tech stocks, which there can be days, right, when the correlation is 1. And I think that's really important, where they can all move off. If everyone's really nervous, really scared, it's going to sell off. But historically, that doesn't hold true. The numbers don't justify it. I've looked at this many different times over many different time frames. QQQ and Bitcoin are not correlated. They're sometimes correlated, but for the most part, they're uncorrelated. They each do their own things. They are not going to trade the same. And I think we're starting to see that again here. And we just emphasize that. And it's interesting because we'll see what Bitcoin does over the weekend, right? Because it's, to Brady's point, it's going to keep trading. And typically it's going to be the early whistle as of, if it's the market's going to recover and there's some news that breaks, Bitcoin's going to start running in advance of the stock market because it's not open yet, right? In the same way, if it bleeds Sunday night into Monday opening, you're going to see stocks continue to sell off potentially. So thoughts on that, Matt? Other things that you want to add?
You guys hit it. Even Larry Fink says that Bitcoin is a flight to safety asset, right? If not now, it will be a couple days. Is hardly statistically significant, but the fundamentals of Bitcoin, they don't change. I feel like we just had a tidal wave hitting all the assets and markets, and it looks like Bitcoin maybe just duck diving that wave a little bit better while things get hit. So certainly interesting to watch.
We got a real pivot here, Brady, from Joe Weisenthal, who, I'm not going to call him a Bitcoin hater, but he's certainly not a Bitcoin proponent. And he just tweeted out a few hours ago, actually it was this morning, and it's only gotten to be more the case. He said, perhaps something to watch. In the last few days, Bitcoin hasn't been looking like a tech stock. He's among many people who've made this observation. Matt Cole has made this observation today. There is also, I saw James Seyfert of Bloomberg making this observation today. These are people who follow the markets. I don't think this is necessarily getting through to your run-of-the-mill TradFi advisor just yet. But if this performance divergence or decoupling continues, eventually it'll get through to those people.
I think it's like a little glimpse into the possibilities of the future. It may not persist, start now, and then just correlation goes away and it's decoupled completely. I don't think we're saying that or that's going to happen at all. But it is a glimpse that it is possible and that it probably will decouple at some point on a more permanent basis, something like gold acts. So interesting day though, and it is being noticed by people in the traditional financial media.
And it's wild when there's things that, Bitcoiners have said for years that people are like, oh, they're crazy. There's no way that'll happen. And then it starts to happen. And then you're like, oh, darn. And then like all of a sudden legacy accounts and big accounts that have not been pro Bitcoin start to parrot the same lines. And so it's interesting that sometimes just paying attention to folks that have been in Bitcoin for a long time, it's a glimpse into the future. And it's hard because sometimes you want to call that, hey, it's happening now. And it really isn't. But the risk on to risk off move when it happens will be something to watch for sure. And it'll be fascinating in a day that I think all Bitcoiners will certainly celebrate. So cool to see.
I mean, it just shows the maturity of Bitcoin over time. And it makes sense. Has the last few years, especially in the past 12 to 18 months, been integrated more and more into the legacy financial system. And it's just a matter of time as this thing matures and gets integrated more and adopted more and more into the financial system and into government balance sheets, corporate balance sheets, et cetera, that there will be a decoupling. It is a fundamentally different asset. It's a strictly limited commodity. And so it should definitely be trading separate from stocks. And that'll just take some time and some increase in understanding about what this thing is. But we're getting there for sure.